Now let's take a look at an interesting conversation my colleague Rucha had with the management of SIS, which is a security management, cash logistics and facility management service provider. Now we spoke to the CEO Dhiraj Singh about the company's recent order wins, the business outlook and more.
SIS is the largest security company and the largest facility management company in India, and we are in the top 2 in the cash logistics business. We have operations in Australia, where we are again the market leader, and in New Zealand and Singapore. For the past several years, more than a decade, we've been growing at a CAGR of 15%, and we expect the same growth to continue in the future. Every year, we add almost like a top 10 security company and almost a top 5 facility management company too. So our growth potential continues for the future. We are a direct beneficiary of India's GDP growth. As the GDP grows, we expect to grow by almost 2.5 times of the GDP growth. Our cash logistics business has seen phenomenal growth, and it is turning an EBITDA of almost 17-18%. And in the near future, our board has allowed us to unlock value in this through a demerger or an IPO. In the facility management business, our focus is on the margin side, as well as providing higher end solutions, which again bring higher margins to the business.
Right. So facility management is where you are expecting the highest margin is what the focus is on?
Yes, we expect to be above 5% margin in Q4 onwards, and we are on track for that as of now.
Right. So in the conference call last time, you had mentioned about improving margins due to, planned disbandment of the low margin contracts. So would that be the margin lever going ahead as well? And if not, what would be the margin levers to support the more than 4.5 to 5% margins that you're targeting?
That is one of the many levers that we are looking at. Obviously, all new contracts that we are taking is going through a strong filtering process of the nature of contracts, the margin and commercial terms that we take. The existing contracts, we are looking at how to improve profitability further by improving the operational efficiencies. As you said, we are weeding out many of the lower margin contracts. And last but not the least, we are looking at optimization and synergies on the SG&A cost side.
Right. Okay, shifting our focus to the segmental topics, let us talk about security solutions in the international markets. There have been a problem of, wage hikes and shortage of labor as well. So how is that panning out for the second half of FY25 as well?
As in any economy, there will be the ups and downs for the wage cycle, and we've seen that in Australia. However, with a lag effect, we are generally a beneficiary of the wage increases because our model is a cost plus margin model. Yes, in one quarter, the cost might come to us, but from the following subsequent quarters, we bill it back to the customer. As regards to the shortage of supply of manpower, yes, about a year ago, that was the case. But the Australian economy is also now in a cool-off period, and that is making availability of more manpower now.
So just making sense out of the cost breakup which you just explained about, the higher wage increase would then pass down to the customer as pass-through cost. So that won't have much impact on the operations, right?
That is the beauty of a model as compared to a staffing company. A staffing company works on a fixed rupee contract model. In all parts of our business, we work on a cost plus a percentage business. And that is important because we take on deliverables. We are continuously involved in investing in the technology side, investing in the training side, and therefore a percentage of the cost is what justifies us to then deliver our SLAs for the client. And this has been very useful as the minimum wages in various states have increased. This has protected our business, and we expect similar trends for the future.
Right. Okay, moving on to the demand trends, do you expect higher demand from the second half of FY25 on the back of, say, festive season, etc.? So does that aid the revenue operations of the company?
In the festival season, yes, there are a few segments, especially the e-commerce segments, the big giants in the e-commerce. They typically have a requirement of 2 to 3 times the normal security guards that they would want. And we are ready for that. We've provided them in the past, and this year also we are expecting the same.
Right.
So Q4 is a period when a lot of contracts get renewed, and we being the largest in the market, always enhancing a market share, we are able to grab more market share in Q4 from other competitors.
Right. One last question from my end. You know, there's a lot of talk about generative AI being incorporated into companies and big talks around that. So what's your take on that one with respect to the employment business?
It is something that is going to touch every industry, and it is going to be impacting our industry too. Both on the internal operations side, we are deploying Gen AI in our HR side, how to recruit people, availability of manpower. We are using it in our sales process, which clients to approach, how to approach the tools of sending out our collaterals, etc. On the client side, client application side, it has a huge implication, because ours is not just a manpower-based business, it's manpower plus technology. So if you have a CCTV, which has a lot of artificial intelligence built into it, that brings far more efficiency and reliability, and a lot of analytics that the client appreciates. So yes, both on the internal operations side as well as the client-facing side, we are going to see a huge impact of that.